Our next guest has a good pulse on not only the commercial real estate market, but the overall economy, not just in the United States, but around the world. Shares of Cbre Group, world's largest commercial real estate services firm, rising today on a strong earnings and revenue beat. The stock is also up more than 20% just this year so far. Here now for a Power Lunch exclusive is Bob Sulentic. He's the president and CEO of Cbre Group. Bob, welcome back. Good to have you with us.
Good to be here, Tyler. Thank you.
I note a couple of things. I'd like to start first with the growth in revenue, and it was significant in the fourth quarter, 14% overall, fee revenue up 16%, and the revenue grew in every single region that you do business in. What's driving that? Is it pricing power or staunch demand? What?
The economy around the world performed in a solid way last year and in the fourth quarter. It was particularly good in certain ways for commercial real estate, and our company took share in all three regions of the world and in all of our product lines. So all of those things together contributed to those results that you referenced.
So the global economy was good in the fourth quarter of last year. What do you see right now happening around the world in the markets where you do business, and what do you forecast for the rest of 2019? As good a year, a better year, a little bit down, what?
A slightly less positive year, but still a healthy year in the global economy. And we said this on our earnings call this morning, we expect to see growth across our business lines and around the world this year. Certainly significant growth in our outsourcing business, but also in our asset trading business, our real estate asset trading business, and our leasing business. We expect growth in all of them this year, and we expect growth around the world.
Bob, how are you viewing Brexit, and what have you seen so far in terms of traffic out of Britain and maybe to what markets?
We've been dealing with Brexit now, of course, for 2.5 years. In the first few months, it was pretty tough on our sector. In the fourth quarter of last year, there was a little downward pressure on real estate asset trading, but leasing was up nicely in the UK. The UK is less than 10% of our business. We continue to watch it, continue to think it's a bit of an issue, particularly on the trading side of the business. But if companies decide that they have to move some of their people to continental Europe from the UK or from London, that will be good for our business because we'll help those companies move. We do believe that London's going to, on an enduring basis, be a very good and very important commercial real estate market.
Bob, for 4 or 5, maybe 6 years now, people have been saying that the commercial real estate segment has to slow down, and it hasn't. It just keeps going, and some of the valuations continue to rise, even with how the interest rate cycle has played out. So are you surprised at how durable this cycle has been?
You know, it's been a very good cycle and a long cycle. We just completed our 9th consecutive year of double-digit earnings per share growth. But there are some very different dynamics at play in this cycle than we've seen historically. The outsourcing of commercial real estate by companies and other occupiers to providers like ourselves is a very big secular trend. This use of office space to attract, retain, motivate people has caused leasing to be very active. There's lots of capital that wants to move into commercial real estate, debt capital and equity capital. So we really haven't been surprised. We've been saying this for some time, that even though the sale of commercial real estate assets peaked in 2015, we've had double-digit growth every year since then, and that's kind of what we expected.
So talk to me a little bit. You talk about occupiers, and one thing that is, I think, different over the past half decade or so is that there's a new category of occupier, and that would be the companies like WeWork or the ones that are involved in flexible space arrangements. How has that changed your business? Is it a net positive for you, a net negative? What?
Well, there's two dynamics that are driving this co-working flexible space circumstance that we're seeing. One is that occupiers, users of space, corporations, really do want some flexibility around a portion of their leasing, flexibility in the way the space is used and flexibility in their lease term. The other is they want a greater experience, a better experience for their people. That is a very important driver of our business. We manage office space around the world with 9 million people in it. We do a huge amount of work for them around office space experience, and we do an awful lot of leasing work with them in traditional space, but increasingly We're helping them lease space in these co-working facilities and helping the co-working companies find space in the buildings that they go into. We've got our own entrant into the co-working arena called HANA, which we're very, very enthused about.
All right, Bob, thank you. Always good to see you.
Thanks very much, Tyler.
Bob Sulentic of CBRE.